I'm Bambi Francisco for Vader TV, the network for innovators. Well, recently Facebook received a valuation of $15 billion. That's good news for social networks or investors in social networks. So joining me to talk about social networks and investing in them and investing across private companies is Jeremy Liew. He's a partner at Lightspeed Venture Partners. Jeremy, thanks for joining us. So Facebook valuation, $15 billion. Reasonable or insane?
You know, I think there's a large portion of strategic value that is being attributed to the $15 billion, well above and beyond intrinsic financial value. I think Microsoft will get a lot of benefit from its tie-up with Facebook, and I think that's in large part what's driving the valuations up to the levels that you're seeing.
Yeah. First impression, though, when you heard about that?
It's a great result for Facebook.
It's a great result probably for some of your portfolio companies like Flixster, which you invested in earlier this year. How much do you think Flixster is worth today? 100 million, 150, 500 million?
Oh, I think $15 billion is a fantastic number. No, I mean, I think people are building value in different ways, and it's hard to compare one company to another. And Facebook has obviously done a fantastic job, and Flixster is also growing really nicely in a different way.
When you write a lot about social networks, so let me ask you a question about Facebook. When you think about Facebook, is it a lot of people draw these analogies between Facebook and Microsoft, Facebook being this new operating system? Do you look at it that way? Should we look at Facebook that way? Do you look at it that way?
I really think about Facebook as a distribution channel. So, a good comparable would be, in the late 90s when you saw, these major portals, AOL, MSN, Yahoo, as ways that you could acquire new customers. Mm-hmm. And in the same way, Facebook is a distribution channel for a company like Flixster or others to acquire new customers. Not necessarily the only channel. And so in the same way that if someone did a deal with AOL, they wouldn't call themselves an AOL company in 1997. So having an app on Facebook isn't necessarily something that defines you as a Facebook app. I think it's just one of many channels that you can use to acquire new customers.
There are a number of companies creating these applications for Facebook, as well as the other networks that may possibly open in the future.
I think all
Would
of them
you
are.
invest in an app company? Or is
well, I think that's exactly the point. All of these social networks are opening up. They've either announced plans or are talking about announcing plans to have some sort of platform. And to define yourself so narrowly as saying that I just want to be a Facebook app sort of limits your ability to be distributed more broadly.
Sure.
I'm most excited about people who are looking for a lot of different ways to acquire customers, certainly through Facebook, through other social networks, through their own website, through SEO, through SEM, through social media optimization. There are a lot of different ways that you can acquire new users, and each of them, I think, is important to build a really robust company.
Now, when you advise companies or your portfolio companies with regards to partnerships, do you tell them, you got to do the distributed, you'd have to create an application, you got to get on those networks, or focus on the traditional distribution channels, whether it be big media companies or the portals? Where should they allocate their resources?
Yeah, I think it really depends on the company. So with Flixster, for example, which is a highly viral application, living inside a social network is a great place to be. There's already a social map that you can sit on top of, and people love to rate movies and recommend them to each other and read the reviews of their friends' movies as they determine which movies they want to see. So that's a fantastic place for them to live. And they've grown largely through virality, both through their own site, through email, as well as through Facebook. On the other hand, another portfolio company of ours is one called Mercantilla, and they sell niche goods. They've got over 200 different websites selling things from rowing machines to claw-footed bathtubs. That's not a very viral application. Just because you decide to buy a claw-footed bathtub does not necessarily influence my decision to buy a claw-footed bathtub. And so for them, distribution is much more about search engine marketing, search engine optimization.
That's interesting.
And depending on if you're a commerce site, a viral site, or a content site, you're going to take different strategies.
Now, getting back to Flixster, because that's just growing like a weed. 400 to 500 million unique or page views a month now. And that's up from, what, 100 million, as you were saying, when you bought them, or I'm sorry, invested them back in February. What's the biggest challenge for Flixster over the next year?
I think there's a couple of things that they're working on. One is just this challenge of managing growth. It's a wonderful problem to have, but dealing with this scalability is something that does need to take some time and effort. But I think they've started to get a really good handle on how to build this traffic, and as some of the other social networks open up, I think one of their key challenges will be to be able to continue to replicate their viral success in some of these other channels and some of these other distribution networks. The other thing that they'll start needing to do, and this is something that I don't have too many concerns about, but it's still an execution step, is to start to make money. And the nice thing about Flixster is that the only reason people are there are to rate, review, recommend movies, talk about movies, and do movie trivia questions. And so you've got a real movie-loving audience. And at the scale that they're at, that's a very attractive audience for a movie studio to reach as they start to promote their new movies. Now, they have had some success in selling advertising directly to studios at high CPMs, but they need to build out that sales organization to really go to market there.
They had great success, but certainly challenges ahead as they try to get even bigger and make more money, and for you, for their investors, for themselves as well.
Absolutely.
And so some companies, like recently in the media industry, like Sling Media, decided, we're selling out right now. We're not selling out, hate to put it that way, but they sold for $380 million to EchoStar. When you think about whether it's the right time to sell right now or pursue and grow and face the challenges, what are the factors you consider? Because right now, Flixster could probably sell for a nice chunk of money.
Yeah, I think the things you always want to weigh is how sure are you of the path, and what sort of execution challenges there are, and weigh that to what the opportunity of value creation is today and what the value creation might be at some time in the future. So the great thing about Flixster is that they're not reinventing business models. They are selling traditional banner advertising to studios, and studios buy a lot of traditional banner advertising. They do a lot of their marketing online, and they spend a lot of money to market their movies. It's one of the key line items in their budgets is marketing. It's a very important part of what they do. So we have great confidence in their ability to execute against that plan, and you can point at other examples, whether it be Yahoo Movies or MSN Movies or Moviefone or MDB or Fandango, who are already taking money from exactly that channel, which gives us a lot of confidence. I can't speak to Slingbox because I'm not an investor in that company, but if you were an investor in a company that had more uncertain business models or was pioneering a new market, then you might have a different risk profile as you thought about that.
When the report came out, there are going to be 230 million people registered to a social networking site by the end of this year. It seems like if you're on a social network, or you're not going to join another one. Does that mean you are not going to look at other social networks to invest in? Is it basically it's done? That market's over? That opportunity is over?
I think there's a difference between social media and social networks. Social networks, I think, good examples of Facebook and MySpace and Bebo, where people keep their personal profile pages. It's primarily for communication with each other, and I think about the read-to-write ratio as almost 1-to-1. So everybody who's reading a website is also writing, and that they are writing on their own profile page, they're writing messages and so forth. Social media sites often have a much higher read-to-write ratio. A lot more people read than actually contribute data. And I think that there is a lot of opportunities to build those sorts of things, where it's usually around a topic. So in the case of Flixster, it's around movies.
You would call that a social media, not a social network?
I would.
Okay.
I would. And so I think there are a lot of opportunities to build a lot of value within these social media sites. I think it's harder to start a social network of the MySpace the MySpace, Bebo, Friendster, Facebook model from scratch today, because it is becoming, as you point out, quite crowded.
And finally, Lightspeed Venture Partners, you're on your 7th fund. You have $475 million in management.
In the current fund.
In the current fund. Where are you in terms of investing in that fund? Earlier, are you just starting to start spending that money? And what is the sweet spot as far as investments?
Sure.
How much do you invest, and at what stage?
We tend to be early stage, technology-focused investors. We raised the fund in December of 2005, so we've been investing for coming up on 2 years out of the fund now, and still going strong out of the fund. 80% of what we do is in the early stage. We like to be active investors that can really help grow a company and help shape its direction. We invest up and down the technology stack, from fabless semiconductors all the way through to consumer internet, and we also do clean tech investing.
Okay, and you also are a very prolific writer, I have to say, on social networks. So if anyone wants to read up about social networking, Jeremy, you're an expert as well.
I've been blogging at lsvp.wordpress.com for the last year or so, and on social networks, consumer internet, e-commerce, lead generation, a range of areas of interest. And I found it to be incredibly refreshing, and helps me concentrate my thoughts on what we're seeing. It's exciting times.
Yeah, it's very helpful for those in the industries you're covering. Thanks so much, Jeremy. Good luck with your investments.
Thank you.
I've been speaking with Jeremy Liew. He's a partner at Lightspeed Venture Partners. I'm Bambi Francisco.